rate cuts are massively bullish. Jackson Hole was massively bullish. So here we are on the verge of a cutting cycle. That's when I told myself, despite the froth and the top signals that I'm seeing, I don't think it's the time to get cute and try to like pair positions. I think probably want to just sit and ride the volatility and deal with it for a while and sell at higher prices.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $50,000. You'll hear more about them later in the show. As always, investments in blockchain technology involve risk, terms, and conditions apply.
We're live. Welcome back to another 1000X. I want to start off with an apology. I want to apologize to the Chainlink Marines who flooded my DMs with absolute hatred after we discussed Chainlink. Let me just pause. We got a lot of hatred. I don't think we were that bad towards Chainlink. We actually said that they have like a lot of revenues off chain, and we just didn't know how to track them. But I think people seized on to the first part where we said, oh yeah, their on-chain revenues aren't great. And then Jonah chimes in and goes, but their off-chain revenues are great. And they just heard on-chain revenues suck. And I got flooded. I got at least 10 DMs on Twitter about how wrong we are about Chainlink, which is really good to see. It means that the cult is still strong. It is down a significant amount right now from the highs that it hit over the weekend. It's down almost 7%. The market's down a lot. And the question is this where we're going? Are we heading into down only for a little bit, Jonah?
I don't think so. I mean, I haven't been seeing the ball very clearly for the stuff that I've been actively trading in the last week. I've done a pretty piss poor job of trading. I think that just as a recap for people who haven't been like bombing me with hate on Twitter and in my direct messages, I bought some ETH at 3,600. I pitched it back out at 4,350. Then after Jackson Hole, I rebought my ETH at 4,800, and now it's sitting at 4,500 down on me again. So overall, pretty proud of the way I traded the first leg of the rally. Kind of had that tingly feeling and got long before the first big rip, but I spooked myself out of the position too soon. And this is what happens when you don't really.
We don't know if it's too soon. And one thing that I'm very proud to say, we proved all the haters wrong that told us that we were washed up and lame, because at 3,800 per ETH, when we got on the podcast and said, hey guys, it's actually like a pretty good time to buy, everyone gave us shit, and then it went up 32% from there.
Yeah, in a straight line.
We told everybody to get into Aave at 280, and there's a wick for up 40%, but like realistically, that also went up 30%. Link did well. Aerodrome crushed it. Aerodrome was fucking phenomenal. If you listen to us on that one, you're up like a 2x. And what we kept saying over and over is that you got to be taking profits. We said that on the last podcast, the podcast before it, the podcast before that. This is going to they're going to be violent moves here, and now that we're like near what we call the end of the cycle, things absolutely can get stupid, but you should be taking profits up 20%, up 50%, up 100%. You need to be pitching out. I don't think by any means we're over. I think people are panicking a little bit. I think that I was a little bit caught off guard by how quickly we rejected after making an all-time high on ETH, and that's when I got a little bit nervous. So we had that little pullback. We were like, hey, it's not fucking over. The shakeout, like that was such a clear shakeout. Get back in the water. The water's warm. And then from there, ETH rocketed up another 15, 20%. And then on Sunday, we had that move up to 5,000 and a pretty nasty rejection. Like if you ever see a down candle, if you see a 5% in an hour down candle after hitting an all-time high, that tells you there's a lot of fucking supply up there. Like there are a lot of people willing to offload. And so I think now we need to find the stabilization point. Like I would not be, like I'm not buying 4,500. I'd probably be a buyer. I'd rebuy 41, but this is kind of no man's land to me right now at this current price of 45.25, just in the middle of nowhere. And so is Bitcoin. Bitcoin's also kind of in the middle of nowhere. The momentum has slowed down. And so now we need to find some level of value. And I think that's probably between, I mean, this is a huge range, but like between 102 and 108, I'm probably rebuying, because I don't necessarily think we're in the mood. Like we're not in the zone for a massive pullback right now. I don't think that, I don't think that we're going down 25, 30% right now. I just don't think that makes sense given the state of the market and how quickly everyone is, how quickly everyone is to turn bearish. The top's going to come when we get a sell-off and everyone has been trained to buy the dip.
Yeah.
It's not going to come when we sell off 10% and people are saying that it's over.
Yeah, I don't understand why people are saying that it's over. I don't think it's over. I don't think it's over at all. And, I think the big feature of the market that freaked everybody out over the weekend was some whale blasting out a bunch of Bitcoin. And we'll get to macro in a second, don't worry. But like, I think the way I look at these sorts of trades, these big trades, is, the whole market will freak out about it, whether it's in TradFi or in crypto. Oh my God, this whale just sold a bunch of, sloppily sold a bunch of coin. The market went down a lot. Oh my God, it's over. I think those two conclusions, like those two events, a whale selling and it being over, are just totally unrelated. It's a one-off. Like when I think about flows that impact the market, I think about programs like miner selling, getting halved, or, in commodities, producer selling, distorting the forward curve. I don't really, like, one-offs don't matter, because unless you can predict it ahead of time, or unless you can front run it or pre-position for it, there's no trade before the one-off flow hits the market. And then after the one-off flow hits the market, it's over. Whatever themes were there, whatever narratives, whatever fundamentals are still driving the market, just from a slightly different price point. So to me, a big whale going and selling a block of Bitcoin, or maybe it was buying ETH BTC. We're not exactly sure how the trade went down, but it went down sloppily on a weekend with a lot of slippage. I think way too much attention and value gets placed on these types of things by participants who don't really understand how markets work. I think it's utterly irrelevant what this whale did. He or she is gone now, and the market can resume doing what it was doing before, which is sending. Why is it sending? Macro, right? So anybody who was victory lapping ETH at 5,000 a token, saying "I told you so," should literally stuff it, because the only reason why it melted upwards was a shockingly dovish Jerome Powell Fed chair speech at Jackson Hole, right? And so, to me, there's a macro theme going on here, which is that interest rates are getting cut. The labor market isn't as white hot as it was before. Inflation has come down. It seems like inflation will probably continue to taper off further. And Jerome Powell, who has been very behind the curve a lot of the time for most of his tenure, really, if he's finally catching on to, like, I think of him as kind of a lagging indicator. Things have been cooling off for so long now, inflation wise, that I think he's like 3 or 4 cuts behind the curve. That's just my opinion. But, let's say that I'm right. Let's say the Fed cuts interest rates by an entire % between now and, 6 months from now. There is no amount of crypto native capital that can front run the inflows into Bitcoin, which will result from that rate cut. Like, there's just trillions sitting in T-bills waiting to get deployed into Bitcoin and SPY and everything else that's risky. and everybody in the American economy and global economy becomes so much richer for every basis point that the Fed cuts off that sort of overnight funding rate. So to me, rate cuts are massively bullish. Jackson Hole was massively bullish. It's a policy stance shift akin to the one that we saw in 2022 when they started the big hike cycle that nuked crypto and proved a whole headwind for, a big headwind for the entire macroeconomic risk asset picture. So here we are on the verge of a cutting cycle. That's when I told myself, despite the froth and the top signals that I'm seeing, I don't think it's the time to get cute and try to pair positions. I think probably want to just sit and ride the volatility and deal with it for a while and sell at higher prices.
Yeah, I 100% agree. The only thing that I would add to that statement is that crypto, and specifically ETH right now, is like just a juiced version of the markets. I mean, yes, it rallied because of Jackson Hole and because of macro, but it rallied 15%. Like it went up a ton relative to the rest of the markets. I mean, you don't normally have crypto go up literally 10 times the amount that NASDAQ goes up in a day.
That's got to be the biggest green candle in years for ETH, right?
Yeah, I think it was the second biggest amount added to market cap ever in one day, other than the ETH ETF. So that was nuts. That was a ridiculous move, and it's because it's a lot easier for these DApps to raise money and plow it into the markets when you have rates getting cut and people going down the risk curve and shoving capital into things that wouldn't make sense with higher rates, right? Like every 50 bips, 25 bips lower we go, the better it looks for Bitcoin, because Bitcoin doesn't produce, right? It doesn't have any dividends. It doesn't pay anything to hold it. So like it gets obviously just more attractive the lower other things pay you, right? So the way that I'm thinking about this is that macro still looks very supportive. What tends to happen, what I've noticed with these moves, is that you pull forward a little bit too much excitement. So on the specific day of the announcement of some sort of shift, not necessarily this isn't necessarily a big shift in policy. It's kind of just, yes, we are going to probably cut rates moving forward. But on the day, you probably get too much optimism pull forward. You get like an exuberance effect where everybody goes, okay, fuck, I can't miss this. Like, let me get in. And then it overshoots a little bit. And then you get some sort of pair back. And what you've done is you've just reset the sort of the starting line for the climb higher, because equities climb higher. That's what they do. If the economy's strong and the data looks good, you're gonna see equities go up and to the right. That's just how this game works. What events like this do is they reset where they are going up from. That's how I view the tariffs. The tariffs sent the market down, and then we just resumed our uptrend. These events, they just reset. And so it's about finding the equilibrium point. Okay, we go up 1.5% on NASDAQ, and then maybe we pare back 20 bips, and then we just resume the uptrend into a good macro environment. That's what's happening right now. Is we're getting, I think, just a little reset, and then we go right back up.
Looking for secure, regulated digital asset custody? Kraken Custody delivers institutional-grade qualified custody for institutions and high net worth clients. With multi-layer security, your assets stay safe, fully segregated, and always under your control. Trade, stake, and transfer directly from qualified custody thanks to Kraken Custody's seamless integration with Kraken Prime. Discover qualified custody built for performance at kraken.com/blockworks. Not available in certain geographies. Custody services provided by Kraken Financial, a Wyoming chartered special purpose depository institution. And deposits are neither insured by nor subject to the protections of the FDIC. Crypto trading involves risk of loss. View legal disclosures at kraken.com/legal/disclosures. Shout out to today's sponsor, Katana. Katana is a DeFi first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
The market will fill that wick, you're saying, basically.
Yes, the market will fill that way. Well, it doesn't even necessarily have to. It fills the wick to the downside always. Like it retraces the gap almost always, definitionally, because we're at all-time highs. It always retraces it to the downside because, again, equities go up and to the right because equities make money and there's a value to making money. So they go up and to the right as long as the data doesn't look bad in the economy. And so anytime you go up, what I'm saying is that you pull forward probably too much of that performance. Like you are, because rates are getting cut, you're pulling forward that performance ahead in time. And what I'm saying is we did that too much. Maybe we did that too much, and that's why we're seeing a little bit of weakness today with S&P down a 0.25% and Nasdaq slightly down today, as barely down on the day. It's basically flat right now. But I think we pulled forward too much of the performance. We sit for a little bit around these levels, and then we resume the uptrend. That's my take.
Yeah, I think that's a good take. I mean, it's kind of the way that people in the market who I talk to, like even my friends in LA who are not, TradFi white shoe people, they're more like just regional loan sharks. I know a bunch of those out here, lending money to businesses against AR or just to bridge loan them some cash to survive through hard times. Like they're all like, oh my God, it's happening. Like it's real. It's the rates are gonna get cut. Our business is gonna pick up. And then today they're probably the excitement is gone, and they're like, well, when do they get cut? It's October, November. When's it happening again? So this is one of the reasons why I'd never really wanted to be an interest rate trader when I had the choice early in my career. I traded corporate bonds, so there's an interest rate component to it. And you hedge with treasury bonds and you talk to the swaps desk all the time. But like the people in that world, they have, like, we're sitting here opining on Powell, and I watch crypto Twitter talking about, Jackson Hole this, job report that. We listen to Fijo, but like the world of interest rate traders, these guys are the nerdiest MIT physics people who have just decided that they want to make a bunch of money, and they go like 50,000 levels deeper into this stuff with all their machine learning and analysis. And I always feel like such a tourist when I try to talk about interest rate policy. It baffles me. And I try to just, the only way that I feel I can have a good edge on this as a non-interest rate specialist is to zoom as far out as I can and try to think of it like a commodity cycle and just say like, okay, are interest rates trending up, down, or sideways? And I do think that the Jackson Hole meeting, just from my naive perspective, was a seminal moment because it signifies the beginning of what I think will be a prolonged period of downward pressure on interest rates. And that's great. But now in terms of how to trade the minutia of it or the volatility, I'm already chopping myself up. Like I suck at this. So I think the only way to do it is just hold on for dear life to your risk assets and not let any of this interest rate stuff scare you. To me, there's also a big deflationary shock coming. Like I fully expect, I think the end of the Ukraine war is underpriced. I really do. I think that when that happens, energy prices are going to crash. It's a huge component of inflation, and the Fed will have no choice but to cut, like, fast. And I think that that will be a big boon to the global economy and to risk assets. So that's on the table. That's a super bullish catalyst that I think isn't really talked about enough. Beyond that, I just think that Donald Trump is going to go juice the macro economy into the midterms. I don't think he wants like a middling, shitty, problematic economic picture for himself. I think tariffs are going better than expected. I think he wants lower interest rates. I think he wants to pump the gas and deregulate. And I think it's going to be a rip roaring, like Q4, Q1, Q2 ish time frame. He has a lot of power. He can control that. So that's what I think we're going to get, because that's what he wants for his legacy. Beyond that, there's really not a lot of we haven't talked about macro in a while, but to me, the macro climate feels so constructive for crypto that we should, that I wanted to touch on it. And it speaks to your kind of like end of cycle volatility comment, right? Because nothing like a little bit of exogenous, macro stuff fanning the flames of crypto to make everybody get super greedy and make prices go high and OGs sell. It's really starting to look like an end of cycle. Like, people are getting excited, FOMOing in, new participant bases are joining. OGs with billions of dollars are just like blasting out of their coins in disgust. Like, things are about to get fun. And this does not speak to my original idea that this was going to be just, a 20-year upward grind, the way that the tech market was post .com boom crash. This may actually be another 4 to 5 year cycle. I don't know. What do you think on that? Do you think it's a 20-year thing, or do you think we're going to have a raging bear market after this is over?
So just to take a step back for 1 second, I don't think that it matters what the Fed does. Like, I just genuinely am now in the camp of none of it fucking matters except for like the week to week moves. The only thing that matters is a true phase shift in their approach to managing the economy based on the data that they see. They can, I think, obviously impact the week to week and maybe the month to month, but on the 3 month to 3 month time frame, the economy will do what the economy does unless the Fed does something like truly drastic. Like, whether they decide to cut this month or the next month or in 3 months, as long as they're saying that, yes, we're going to manage to a 2% rate, like we're going to manage to 2% inflation, and we are going to bring the rates down, which, like, there was kind of no possibility that the Fed was going to keep rates where they are for like 2 years. I think like nobody's saying, like, it was like the debate was, are they going to cut now or in 3 months or in 6 months or in 9 months? Like, that's kind of the debate. And that's not really a massive shift in approach. It's just a timing question. And whenever you have a timing question, it doesn't really impact the course of the market, in my opinion, other than short term. What impacts the course of the market is the Fed saying, hey, I think that inflation is transitory, therefore I won't manage towards it. And then in November of 2021 saying, shit, actually, no, inflation's not transitory, and we're going to have to reverse a policy of 40 years and start hiking rates like crazy, right? Like that's going to impact the markets. If the Fed comes out and says, shit, we're going to cut rates very quickly right now because it looks like the economy is weakening and we need to get ahead of it, that is going to, I think, affect the markets. I think the market would actually get nervous at that, and like the rate cuts wouldn't matter, right? But basically, unless they're taking a big step in one direction or the other, I just don't think it matters that much, which is why I find Fed whisperer talk like pretty funny. Like, I just don't necessarily think it matters for the average person. Like, my advice to you, the listener, that tries to pay attention to macro is you can use macro for 3 things. You can use macro for trading the day or the week. If you want to try to make a bet on what's going to happen at Jackson Hole and you think it's mispriced, you can make like a 2 to 5 day bet on that. You can have multi-year theses on where you think the world is going and bet your money on that. Or you can bet on massive inflection points in the macroeconomic order of things, in which case you get some edge. But like, other than that, I just don't really like, I'm not going to ever say like I can use macro to figure out whether we're going to go to 150 or 75 first. Like, you know, like you see what I'm saying? It just, I don't think it matters that much. I used to have a joke at my old firm with my partner, because he was a big macro guy, right? Like, he'd been in TradFi for an extended period of time, 16 years, and by all accounts was like a very good macro trader. And he would use it, like he would use his opinions to try to trade the cryptocurrency markets, and more often than not, it was actually unhelpful, because you might actually get it right on equities, but when crypto has idiosyncratic flows, crypto has idiosyncratic flows. Like, if the economy is not falling apart, but people divest a little bit out of NASDAQ and it goes down 2-3%, but DATs are still able to raise money, like crypto's going up, right? It's just like,
yeah,
there are idiosyncratic flows you have to pay attention to.
Looking for secure, regulated digital asset custody? Kraken Custody delivers institutional-grade qualified custody for institutions and high net worth clients. With multi-layer security, your assets stay safe, fully segregated, and always under your control. Trade, stake, and transfer directly from qualified custody thanks to Kraken Custody's seamless integration with Kraken Prime. Discover qualified custody built for performance at kraken.com/blockworks. Not available in certain geographies. Custody services provided by Kraken Financial, a Wyoming chartered special purpose depository institution. And deposits are neither insured by nor subject to the protections of the FDIC. Crypto trading involves risk of loss. View legal disclosures at kraken.com/legal/disclosures. Shout out to today's sponsor, Katana. Katana is a DeFi first chain built for deep liquidity and high yield. No empty emissions, just real yield and sequencer fees routed back to DeFi users. Incubated by Polygon Labs and GSR, Katana is launching with notable ecosystem of primitives, assets, and partners like Morpho, Chainlink, and more. Katana's 1 billion cat campaign is live. Bridge and deposit directly into vaults in one simple click and start earning immediately on your Ether, Bitcoin, USDC, and more. Follow the link in today's show notes to get started. As always, investments in blockchain technology involve risk, terms, and conditions apply.
So let's talk about one of those idiosyncratic flows. Let's talk about the Galaxy Solana DAT. Everybody's jumping up and down with excitement about that one. It's Galaxy, Jump, and Multicoin are trying to raise $1 billion to create a Solana treasury firm. They'll probably get it. Maybe it's too small, but why? But Solana's been outperforming on that narrative until today, of course. What are we? I guess I don't know what to think about DATs at this point. Are we going to see the end of the capital that was already raised hitting the market and lifting it higher? Or do you think that the DAT thing still has some legs and new capital will get raised by coalitions like this at current levels?
I am actually, like, right now, I'm getting tagged in a bunch of stuff, like, as we speak, about Solana DATs because of the stuff that I said on Thread Guy.
We got to talk about that too.
Yeah, it's
Red Guy. Love that guy.
I
so
think
Gen Z.
I think a decent amount of people got upset with me over that, but like, I literally just don't give a fuck. I don't work for anybody. I'm too rich to care. I don't need to like scam people out of money to make money for myself. Yeah, I mean, obviously these locked Solana deals are, like, in my personal opinion, really dumb because they're like, you are being used as exit for locked Solana. People can't get out of their locked Solana for another year, 2 years, 3 years, and they're literally using you to exit. It's not I think it's kind of scammy. There are some there is some attempt to fix this. And so not everybody that's involved in Solana DATs is scammy. There are some people that are extremely scammy and extractive. There are other people that are trying to make it work. They're like trying to figure out like, how can I make everybody win? And one of the ways that people are trying to do this is by saying, well, you have to match one-to-one with cash. Whatever you put in locked Solana, yes, you get liquidity, but you also have to match that with cash to buy new Solana, right? So you're basically doubling your Solana exposure for early liquidity, but you actually are buying Solana. And so this DAT will have cash to deploy at some point in the future, right? So a lot of these Solana DATs are just fucking give us your locked tokens and we'll announce a $500 million raise and then we'll go dump this shit on retail.
Yeah.
And that's obviously not okay.
That is scammy. I actually got one of my favorite projects in crypto reached out to me. I'm not going to say which one, about the idea of spinning up a DAT for that project's token. And I was like, no, I don't believe in DATs. It doesn't make sense. And they were like, no, hear me out. So they kind of spun an idea where it's like, okay, this DAT, like it would, from a regulatory perspective, crypto projects can't do a bunch of things that they want to do. And they were like, wouldn't it be great if we could have sort of a TradFi legal structure with a bunch of locked tokens that kind of tokens that don't need to be sold under any circumstance, kind of the way private equity would call it permanent capital, but just something with a longer term view within a TradFi, corporate structure. And then that DAT could do things that are profit accretive, like market making, basically be an opco that can do things that a crypto project can't do, other financial products tied to the underlying crypto project, basically like an ancillary, like a sister business, with different regulatory constraints and a supply of tokens to do things, rather than hiring Jump to be a market maker for some usurious fee, or rather than contracting out different types of things that would have gone on chain, but this project can't do off chain. Just have the DAT do it. Like basically create financial businesses around the underlying crypto project using the token legally and kind of at arm's length, but connected to the underlying project. And I just thought, like, you know what? That makes sense. If those activities are profitable, why not? I don't want to reveal too much detail because I don't want to like dox anybody or the project. But to me, it just seems like the DATs, like you said, I kind of was thinking of it as one size fits all, where they're all just scams and stupid, except maybe MicroStrategy. But even MicroStrategy's become kind of scammy and stupid. But now at this point, I think I need to look at them.
I still love MicroStrategy.
I love him. I love him.
I just fucking I love Sailor, man. He's just he's so good at his job.
Look, some scams some scams become self-fulfilling, what the hell is it? Self-fulfilling prophecies. Like look at Scientology, right? That scam just, it hit escape velocity. And I'm not saying that MicroStrategy won't become the next Scientology. Bitcoin certainly has become the next Scientology. So like sometimes you create something that's stupid and kind of a multi-level marketing scheme, and it just works rarely. And yes, MicroStrategy is already there. But what my point was, one size may not fit all. I agree with you. I think some of these DATs are actually probably creative. Not the one that's like, hey, we can let our insiders dump lock Solana on retail. That one's stupid. But yeah, I like the idea of TradFi sister businesses to these crypto projects that can actually produce revenue using the token in interesting and creative ways. That could work. It also locks up more tokens.
I mean, as people have been saying for a while, I think that they're just the new foundations. Like these things will become will become the new token foundations. Now the question is obviously, how long can this possibly last? And really, what are they doing? It's just another form of regulatory arbitrage. That's what it is at the end of the day. Just repeating what you're saying is it's regulatory arbitrage to be able to do things that you couldn't necessarily do otherwise, right? And especially like in an ETF format. What else can't you do? But I think definitionally, like if these things last for a long time, then what's going to end up happening is that they're going to have to chase themselves down the risk curve. Like people will continue to iterate on the products and make them riskier and riskier, deliver higher returns. And then at some point, obviously that doesn't necessarily work out well, but at least for now, I don't know. I'm not necessarily like, I'm just not nervous about the market right now, because I do think that there is still appetite for this stuff. I do think that Solana is going to be like, okay, if the market refuses to listen to what I've been trying to warn them about and Solana pumps to like 250, that is going to be the short of the fucking century. Like it's just going to be it's going to be such a good short. I mean, Solana has disappointed me in many ways. I thought that they would do a better job capturing something, I guess. They have stuck squarely to I think they've unfortunately like pigeonholed themselves as like the meme coin chain. Like I was hoping they would be able to break out and use the activity that they had from meme coins to bring in applications that people are really excited about. And while there are a ton of really good people building on Solana, they've sort of lost that PR war right now to Base. And that says nothing about Solana's fundamentals. It says a lot more about sort of the ethos and like campaign that I think both have been running. Base has somehow managed to feel more legitimate in terms of, hey, like we're a real chain. We're not just a meme coin chain, but also have meme coins on there. It's just kind of interesting, right? Like if you look at
what is Solana's branding strategy at this point? Because Base, like all those guys are in Washington. Brian Armstrong is on every podcast talking about, proliferating crypto in sort of buttoned up ways. Solana had a much easier, now they're fighting an uphill battle against that. But before it was a much easier battle because no matter how professional ETH was, it was just slow and clunky and terrible to use. Base is just as fast as Solana for all intents and purposes. So like Solana doesn't have the luxury of combating an L1 that's basically from a bygone era at this point. Something like Base is it's a formidable competitor this time. So yeah, what is their branding? What are they trying to do? I guess we've got,
That's a good question. Maybe we need to bring somebody on again.
Yeah.
To talk about this. Like
yeah.
Maybe we need Anatoly back to give like the vision for Solana moving forward and what are you trying to accomplish right now? What is your vision? What is your strategy? Because I am a little bit lost on it, and that's unfortunate. Other than meme coins and esoteric random shit that people bring up. Like if somebody brings up Hive Mapper, I'll like shoot myself in the face.
DePIN. I was so right on DePIN. I will give myself a pat on the back.
I was very wrong about DePIN. I was very, very wrong about DePIN, unfortunately.
I've been wrong a lot, but not on that one. That one I nailed.
Like yesterday I took the metro subway, I guess. So I took the subway. I got flogged by a New Yorker for saying metro. I grew up in DC. We say
it's the DC Metro.
Yeah, it's a DC Metro. It's a New York subway. I get it. Whatever. Anyway. So moving on from my inability to speak the New York English language properly, I was on the subway yesterday and I saw an ad for Helium. And it immediately sent a chill down my spine, and I felt this stabbing sensation in my heart. And I keeled over and I threw up in front of everybody. And they had to cart me out and take me to the hospital. And my last words were, "I believed in you, Helium." I believed in you before they sedated me. I talked to the psychiatrist. I explained to them everything. I was a big Helium believer. I thought Helium would take over the world. Helium, in fact, did not take over the world in any meaningful way. They sent their token price to zero while still managing to expand their network. So that was a fun experience, Jonah. Have you ever been sent to the hospital by a failed investment?
Trying to think. No, thank God.
So let me tell you exactly why.
I'm so salty about Helium. I've spent so many dinners and lunches and nights and weekends explaining to non-crypto friends why, like, this is back in 2021, why Helium is the perfect example and how DePIN is the perfect example of how crypto can bootstrap a network and how it's going to be the future. And it just hasn't worked out. Hive Mapper too.
Yeah, well, let me explain to you something about why. It came to me in the dream while I was in psychosis about Helium in the hospital. What I realized is that Helium was just printing its token forever and ever and ever and ever to reward people that thought one day the Helium token might go up. Now, silly me, listened to the Helium team many times, and they were constantly saying, we're going to find new ways to create a token sink for Helium. Like, we're going to find ways to deliver value back to the Helium token itself. And the answer that I guess they came to in the end, because they actually never implemented anything, was, fuck it, no, we're not going to do that. We're not actually going to do that.
But they didn't make a big announcement, did they?
No. So that's really what happened. Is they never made the token useful for anything, despite saying that they would, which gave me hope that the token might go up at some point. Like, they never actually made it useful for anything other than being used as a reward for the miners. So I am still of the mindset that there will be a DePIN or D something that figures this out at some point in the future, where they give out equity that they also buy back to bootstrap a network.
Yeah.
Now, Hyperliquid's a great example of this. They had a massive airdrop. Like, they gave out huge amounts of free equity to people. A ton of people traded on their platform, and then a ton of people got rich because they delivered the token to these guys. But the token was just equity. The token was like, they were using their revenues to buy back the token. So they kind of pulled it off correctly. Now, that is obviously an exchange, but the same concept in theory can obviously work for a Helium. But Helium, they just actually need to, like, not print a ridiculous amount of HNT relative to the amount that they're buying back. It's like kind of like a chicken and an egg problem, but you see where I'm going. Like,
bootstrapping a network. It's a common thing. Like the classic intellectual example that my research analyst used to provide to me when I worked at Cumberland was, he was like, think of decentralized network bootstrapping. Like, let's just take instead of looking at Helium or Hive Mapper with all of the hair and flaws, just imagine decentralized Duber, he called it. He's like, why wouldn't we just, like, that type of network is perfect for crypto. Because, you give the drivers some tokens, you give the equity holders tokens instead of equity, all revenues from the platform going to token buybacks. It should work so perfectly. And he was making the exact same argument that you were making. Now it all just kind of clicked for me as you were providing the Hyperliquid example of how it works. Like, the reason why Hyperliquid works is because it started generating money quickly. Uber, I think it was like losing billions for 15 years before it turned around. So you need an injection of, like, in order to create Duber. The reason why it wouldn't work with crypto is because you're forgetting the most important stakeholder in this entire situation, which is the coalition of VCs who pump in tens of billions of dollars to basically scale the network and cut out all competition until it's just so global and integrated in society that you can just, like, slowly turn up the heat on the frog sitting in the pot, the frog being the customer, the heat being the prices the customer has to pay, until, now they're paying $50 to go 16 blocks in New York City, right? That can't happen if you try to bootstrap it. Basically what Helium is doing, they don't have the VCs, they don't have the tens of billions of dollars of funding to, like, advertise and do customer acquisition, all that crap. So they're making money, but they're just not making enough money, right? To buy all of the stakeholders out of their tokens. Even if they hadn't fucked up tokenomics, which they did, it still wouldn't work. The only reason why Hyperliquid worked was because an exchange just scales so fast. For these real world networks, like, basically lived experience in Silicon Valley for marketplace technology reveals that you have to just lose a bunch of money for a long time to establish a market, like establish a new market and dominate it such that you can eventually charge what you need to maintain the service. Same thing happened with Amazon too. It wasn't really till AWS came along. Actually, no. Like, when is Amazon's retail business even profitable? Like, these huge networks are just expensive as fuck. And to me, I don't know if I don't know, like DePIN may work one day. I'm just.
Yeah, no, actually, the retail business is profitable. That's crazy. The operating margin is 6.4% in North America.
Yeah, that's wild.
That's actually pretty fucking good, to be honest.
Yeah, that's amazing on the size that they do.
International retail is 2.6. And one thing that I've always, completely off topic, but one thing that I've always appreciated about Amazon is that they make deliveries to places that are so clearly unprofitable.
Yeah.
Like they'll make deliveries to the literal middle of nowhere, backwards towns in Appalachia that obviously are not profitable to deliver to, but they do it because Jeff Bezos, for all the shit that he gets, is not he's not a horrible human, even if he has horrible choice in women. Yeah. Now,
I respect that. The guy just wants a little fun, something a little sexy, you know? He's just a nerd trying to live out his teenage years in his 50s or 60s or whatever.
Yeah, I guess a little bit of class would be nice, but look, man, I'm not going to judge. I'm not going to judge a giga-billionaire that's clearly been more successful in life than me. Like if he's certainly earned it. Like if anybody's earned it, he's certainly earned it. He's done, like, of all of the big tech billionaires, he's done the most good for the world. Like, has Zuckerberg done any real good for this planet? No, not really.
He bought WhatsApp. No, I'm joking. Yeah, I agree.
Yeah, like, okay. Let's
but
go through.
He's making the sunglasses that record video of you all day. Yeah, I agree. It's all kind of insidious and weird with the meta empire.
It's like Elon Musk and Jeff Bezos have probably been the most successful, like the biggest value adds.
Yeah, I'd say Elon with the whole let's decarbonize transport. That's pretty big.
Like even Google, like Larry Page and Sergey Brin. Google is big because it won. But they didn't invent the search engine. They just refined the search engine. And I think if Google had never existed, we would have had a comparable search engine at some point. No? Don't you think?
I don't know. Maybe. I do think, I'll give those guys their flowers. I love Google Maps. I love being able to search for stuff. Life was kind of, actually, you know what? Before Google, and we do this on Shabbat as Jews without using electronics, it's nice to just have arguments and not immediately go to Google to find the answer. Like it harkens to an era when people would just debate shit and somebody would be wrong, but neither person in the debate would know who, you know? So yeah, maybe like it's nice to have instant access to all of the world's knowledge on Google, but there was something kind of special about just haggling over debates and attempting to discuss things with people without getting distracted by your phone after 3 seconds. Google Maps is awesome. True. I did not enjoy getting lost. I will give those guys their flowers for mapping the entire Earth. That is dope.
That's true. Google Maps is huge.
That's the best product they've ever made by far. That is, they changed the world with that one in a great way.
Now, have any crypto founders ever made anything as wonderful as Google Maps? What are we doing? What are we doing here, guys? Like what the hell are we doing?
Yeah, I'm not doing so great in the context of Mag 7. I agree. Crypto founders made Axie Infinity, that one-shotted an entire generation of game developers to try and build on crypto. Now all those people are getting vomited back out into the normal world.
Yeah.
Is that Blue?
It is
vomiting in the background. That's a great. We should get that sound effect.
Is that the? Can you hear him? I didn't realize that you guys could hear him.
Yeah, I could hear him.
Let me just, there we go.
Because I was talking about Axie Infinity. I go Axie Infinity, and then Blue goes, ooh.
Yeah, he really hates Axie. He's not,
Oh,
he's
what a
not a big
cutie.
Axie fan. Yeah.
What a
Look at him.
cute dog.
Speaking of cute dogs, I probably do have to take this guy for a walk soon.
It's been a good recording, Avi.
It has been a great recording. This is awesome.
We should, I guess, like very quickly. I saw that SBET authorized a $1.5 billion stock buyback program to combat their discount, their discount of their market cap to NAV. To like, imagine that's not going to work, right? We can't expect all of these DATs to start buying back their own stock. They've been contracted to buy coin, not to buy their own stock. The Ponzi-ish level of these things is just mind blowing. I don't know. That's my closing thought. I don't know if you even need to respond to that. I was just sort of like,
well, SBET's down. Actually, SBET's holding up pretty good.
Yeah, it's probably because of that.
Like it, yeah, it looks good. So anyway, guys, we'll catch you on the next pod. This was a pleasure as always.
Good talking to you, Avi. Good talking to you, Blue.
Take care.
Later. Nothing said on the 1000X podcast is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed.